touch these down. Okay, cool. So let's have a look at these markets. I'm looking at GU, and we can see here that this was the Asian session. I want you to focus on this little red box. This red box is an Asian session for me, and we can see how liquidity was taken in this Asian session. And when London started here. London's a yellow box. This is red, this is blue. Now let's just knuckle into if you guys want to get your settings like my settings, all right? So I'm only using this indicator for sessions to let me know what session's happening when, all right? This indicator is called ICT kill zones and pivots. And you can determine how far back you want this indicator to show you these sessions. This is 7 sessions, ultimately 7 days back, all right? Or, you can change that, all right? You can put a time frame limit, a limit of where you don't want to see these indicators. If you've zoomed out to a certain time frame, you don't see them, all right? You can do that. And, there's lots of other information, but here's the colors, how I've got my colors organized, like so, all right? Yeah, there's no point going through them bit by bit if you're not got the information, but it will be on a document. So if you wanted to be able to see it, and there's many different session indicators, to be fair. It's not the only session indicator. There's many session indicators. All right. Now I can see here, on a 5-minute time frame, a breaker structure W that this came down here and captured the liquidity, and maybe now there is an entry. All right. Maybe now there's an entry as the market comes back in here, taps into this area in here. All right. Now, I want to be in here for the sell, but we just grab this liquidity, and I'm going to take a jab. I'm going to take a jab in here. I'm going to see how the market reacts right now. I know what my lot size is, and I'm just, for full transparency, I'm going to take a jab because I don't fully like the way this W was formed. I'm not going to lie to you. I would have preferred to see this W formed down here, but it's only the right shoulder. We'll see. All right, I'm going to take a jab. If anyone wants to jab with me, they're free to. Okay, and I'm going to do it on the session so that we can keep an eye on it. All right, for good, bad, or for ugly, and then we can speak about it. Okay, so I've done that. Now, I actually want to be in here for the sell. Okay, for the overall market. But I think to myself, it's very possible that this market may go and capture this liquidity first before deciding it wants to turn over. Let's look at it from the bigger picture in regards to this market, okay? Zoom out. All right, so we can see this energy over here. All right, bearish market. All right, bearish market making lower lows and lower highs and lower lows and lower highs. And ultimately, I want to be in for a lower low, all right? Now, that's on a 4-hour time frame. I do want to be in for a lower low. So what I've at the moment is that I believe that the market may wish to capture this liquidity first, all right, before deciding it wants to start trickling down. Okay. Now, either way, we will find out. We will see, whether or not my little jab. When I say a little jab, it means that I've got involved. Just based upon a small risk, whatever I'm risking, and the things I can get out of this early. All right. So even though I've taken a jab at very minimum risk, I'm probably going to end up risking about $50 just to keep an eye on this, to understand whether this is something I want to continue with or not. All right. Because my overall bias is I want to be in for the sell. All right. Now we have seen this market here come and capture some liquidity, which was below, have a look, this line here, Asian session, and we saw the market push all the way down to a previous London session and wick down below it and push all the way back up in here. All right, have a reaction to that. Okay, I'd really like to see this market through this session. If this is where this market is trading away from, I'd like to see this session, this market pushing up in this direction, to be fair, and then I'm in for the sell and sells only. All right. However, like I said, I have taken a little jab here, and I don't really love the price action at the moment. and I'm willing to stop myself early out of that trade just to watch it, because today, and there is a lot of kind of news happening, a lot of euro news happening, all right, a lot of orange folder USD news. So the setup's not looking great, so I've taken a jab, all right. And when I say jab, it just means less than my normal amount of risk. Why have I taken this trade as a jab? Well, we've just taken Asian session lows. Even though I want to be in the fight, I'd prefer that we was up here taking these highs over here, and then I'll be like, guys, sells only, get ready, get in the sells. I'll be saying, look, let's get in this, all right? But what happened is through this Asian session, we've actually pushed down, and when London started, we pushed down and captured these Asian session lows first, all right? And when I look at this, I'd like to have seen, on a much smaller time frame, a lovely breaker structure W, all right? But I've seen it. I'm looking at it here, okay? Here, manipulation W here, here, meaning that in here, around this area, really around the area of where the break was, yeah, I'm looking for a zone, all right? I'm looking for an area that the market might turn around. Now it's pushed down a little bit past that, past this little imbalance that existed here. When I drop my time frame down to my 1 minute, I can see that candle that made the break in here pushed, there's imbalance all the way down to here where we are right now. But what I said is, if I see this market pushing down here, I'm going to stop myself out early. My stop at the moment is all the way down here as a jab. If I see it pushing down here, I may stop myself out early because I don't really like the price action, okay? It's currently sitting in a bullish candlestick zone, all right, or an order block, in here. It's sitting in here at the moment, but I don't love the price action. All right, I'm going to be honest with you. I'm not over the moon about it, okay? Now, let's look on a bigger picture and understand. And what I'll do is I'll also pull up our document, which I still haven't amended yet. Yep, I know, I haven't amended, but it's small amendments. Nothing that's going to have too much of an effect on what or you being able to use it as a good resource as a guide. Just a couple of elements, all right, which was adding in the news, which I must have been a high because I forgot to add the news in, and just a couple of little grammar things where I've spoken about pushing down when I didn't mention also pushing up and things like that. So let me just pull that up, which is this PDF here. All right. So this here is just a very loose guide. This is not going to teach you how to trade. This is not going to give you the information. This is going to remind you of a process. Yeah, remind you, okay, am I in these sessions? Remind you, has the market first taken liquidity? Remind you, was the leg out have, strength? Did it break structure, sorry? Remind you, was there a manipulation pattern, where the shoulders higher on the M or shoulder lower on the W? Did it have strength and speed? Did you wait for the price to return? Did you place your stop loss in the right place? Is it aggressive, medium, low risk? Do you understand the implications of those things? Your TP targets. Have you seen a target for your trade where you're going to get out? Can you see an opposing liquidity zone? Can you see some structural highs and lows? Have you got to a risk to reward ratio of a 1 to 10? And you're like, wow, I've done great. And you're still trying to hold on because you wanted to go to a 1 to 100. No, forget about that. Take your money. All right. Do you understand how to take partial profits? Right? Yeah, that's that. I don't like it. I'm going to stop myself out early. I'm going to wait for this candle to close the next 25 seconds. And if it closes below this little level here, I'm going to stop myself out early. That's fine. Like I said to you, literally maybe risking $50 is what it is. Okay. I'll pop another alert in here. You see, the reason why we wait for candles to close is because we want to see how price reacts to the area. Price, we want to give it the opportunity to tell us something. So say, for example, right now I'm going to stay in the trade because it pushed all the way down here, past in this area, but it didn't. I don't like the fact that this wick even came lower than here. I can't lie to you. I don't. But the price market pushed it back up and said, you know what? No, we like this area. Move. Let's see how much strength it has. Is the seller's going to win and push down, or the buyer's going to win? But I don't like the fact that we're down here. I was hoping to see us just tap into this area here and then go. All right. but this market was moving a bit. No, there wasn't too much setting up. When markets opened, there wasn't immediate things that I saw happen when markets opened. That volume didn't come and inject into the markets as I'd like to see it. So now it's kind of just dancing, all right? So we'll keep an eye on it, all right? You know, let me explain. When you're doing your partial profit taking, in MT5, you just double click your position. Double click your position that's open, and then you'll be able to go and edit, you know, edit the lot size to be able to take 50% off. So if you've got 10 lots on, then you're going to change it to 5 lots. You've got 1 lot on, you're going to change it to half a lot. That's how you take 50% off. What that means is that if you was up $1,000 in profit, as soon as you take off 50%, you'll see your profit drop by 500 because you've banked 500. What are the benefits of that opposed to just moving your stop? You see, when you move your stop, you're giving yourself more chance to get stopped out. Because, for example, you're up here, this is the trade, this is a random pair, and like, you know, you move your stop like this. Well, then you could get stopped out here and the market didn't go to hell for another 8,000 pips. Because when you here, your trade's risk-free and you roll off 50% of your position, you're taking 50% of profits at this price, and then the market's still got that breathing room if it came back up here to roll in, because you don't really care about it. You're risk-free and you've taken 50% off the table. That's why I've changed that angle. I used to be a person who just constantly moves their stops, but it's a bit more labor-intensive. And I've seen many a time I've done that, and then the market's come back, stopped me out, and then gone to hell. All right, so we have to find another way. All right, have a look. See how we had a reaction out of here now. So I'm still in the trade, currently in the blue now, but I'm watching now. We're going to start breaking some structure. So what have we learned by just watching this? Well, we learned that by sitting here and being patient and waiting for candles to close, we allow the candles price to actually finish its sentence and tell us something. Because there was a point when this candle was a big red candle all the way down here, and I was like, I don't like it. I don't know why it's coming down here, but let me give it the benefit of the doubt and let the candle close. I've let the candle close. It's pushed up in here. To be fair, I want to make it risk-free as soon as possible. Yeah, but I'm going to leave it just to give it some breathing room. I am going to keep an eye on it by using my alerts. So I'm going to pop an alert here, and I'm going to pop an alert when it's doing good things. And I'm going to leave that. All right, I'm going to leave it to see what it does. All right, so I want to go and look at another pair. In fact, yeah, so I want to look at, now let's analyze this one of what I really want to do. All right, I'm going to zoom all the way out, reset my chart. I'm going to delete everything off my chart, and then I'm going to show you what's in my mind, okay, and what I'm thinking about this market. I want you guys to follow me. If there's any time that you're not following what I'm saying, I want you to unmute yourself and tell me, Jay, can you explain that one more time? All right. This is GU. I was asked the other day by Darren, what pair he should trade, and I said trade GU. All right. There's other pairs you can trade. You can trade US30, you can trade the NANS, you can trade gold, you can trade all of these different pairs. It's difficult for me to just, because this is something that is personal. Yeah, sometimes people just have to realize that they like the way US30 moves, or they like the way gold moves. I've got someone at the moment who's gold trader. I said, I just love gold, I love the way it moves. And they're doing well. They're growing their account. All right, they have a live account and they're growing their account trading gold only. All right. But at the moment I'm here trading GU predominantly. All right. I find when I start to cheat on GU and start trading some other markets and that, it likes to, they like to remind me that, go back to GU, all right? So you can see here that this market is bearish. Everybody here can see this, and everybody here can open up their market charts to as big as possible and be able to get these lines in here, all right? Then we're gonna look down and we're gonna drop our time frame down. Now remember, everything that we're doing is to get an understanding of this market. And this is a benefit, going out to Darren, of you being able to say they only trade in 1 or 2 pairs. Let's just say 1 pair. It's because you know what's going on with it, inside and out. It's your baby. Yeah, you know what's been happening with it. Now this market was pushing up like this, made an impulse like that. All right, that's the alert ringing for my GU of it going the right way. Okay, we'll watch it, because what I want it to go for is I want it to go and take Asian high liquidity. So ultimately I'm going to move my stocks. I said I want to make this risk-free as soon as possible because I just didn't like how deep it went in that retracement. Kind of had me like double guessing myself. I'm gonna just reduce my risk down substantially. Like so, nothing in it now, all right? So we can see the market made this impulse and pushed all the way up to here. So the market is trading within this high and this low point. Do we understand what I've just said? Markets come up here, made this high, and then it started to break structure, breaking these lows all the way to here. So this is the pitch we are playing on. Yeah, this is the pitch between here and in this box here is the pitch that we are currently, occupying. This pitch here. All right. On that basis, we are in a premium of that pitch. Okay. That GU's had a lovely push. I'm gonna show you guys over here real quick. So that just shows, and that was a good example of waiting for these candles to close to give us the information. Have a look. My entry is down here. Okay. Because it was a jab, I'm not in as big as I normally am, but it's still like $700. All right. And it's pushing over here. Now, ultimately, what I was saying is I want this market to be able to, in fact, let's see what our R to R is so we can stick to our strategy. I think my entry is about here. Now I could take off, I'm gonna give it a second. I could take off 50% to be fair. It is risk-free. I could take off 50% and let it run. I'm gonna look at it again in a minute. I know we're gonna make a retracement soon at some point. I know it's gonna happen, all right? But ultimately where I'm going for, what I want it to reach for is, have a look, there. Once we tap into there, all sells. Tap into there and I see it break a lovely structure, whether that happens in New York or not, I wanna be in for this sell. And hopefully this market doesn't surprise me when I keep pushing up, all right? But let's zoom all the way back out. I was just giving you a quick update to show you what's going on, all right? So zooming back out, we are in this box. This is our pitch. So even within our pitch, if we was playing consolidation, we're in a premium right now, all right? We're in a premium of that pitch. And, that market there, if we were trading this box, let me just have a quick glimpse at NAS, something I set up a bit earlier. Okay, NAS is tapping into an area of interest as well. Okay, something I was looking at earlier. NAS is tapping into an area of interest, all right? The NASDAQ. Have a look over here. What can we see over here? Can anybody see anything around here? I can see a big break of structure manipulation, M. Yep. Okay. I can see it on the 15-minute. I can also see it on smaller time frames also. And that was an area of interest that I identified. Doesn't look great here, to be fair. It doesn't look too great here. But either way, an area of interest, and I really want to see what the markets do in this first little orange area, which is a previous lower structure on the higher time frame. So what I mean by that is this: on a 15-minute time frame, that's the middle of the M. Yeah. On a half an hour time frame, that's the middle of the M. All right, that's the area of interest, but I want to see whether this market's going to push up a little bit further. So as soon as it gets into this area, what I'm going to be doing is I'm going to be looking at how the candles react. Okay, I want to see how the candles react from here in this area in here. So I've got my alerts that keep an eye on the market for me. Let's go back to our GU. So you can see our GU is pushing up. It's pushing up bullishly. It's just wicked above some areas and making a little bit of a retracement on a smaller time frame as I'm just looking at my other screen. But look, so here we can see we're in a premium even off this pitch that we're playing on. Okay, the market came all the way up into here to these levels here, tapping into some imbalance and some areas of interest over here. Then we had a reaction. That doesn't mean that reaction is going to go all the way to hell right now. It doesn't mean that. All right, we're on a daily time frame. Let's go to our 4 hour. On our 4 hour, we can see the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Got to that area of interest. We made lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. There is nothing here turning around and saying to us right now the market's ready to make higher highs and go back up in here. So on a 4 hour time frame, the market is in this bearish action, but we're coming down into this discounted area on that line, you see? So if the market did want to have a reaction around about these levels, is a time when the market could decide, yeah, this is, we want to turn back around and push back up in here. We don't know what the market wants to do. When I got onto my hour time frame, we can see that this market ultimately made a lower low, made a lower high, came down here, is kind of doing the hokey cokey in here. Yeah, we're kind of doing a little bit of a hokey cokey in between this pitch here. Have a look. The market came down and made this low. Okay. The market is kind of in here. All right. Or if you even wanted to go there, in here, in this box. The market's kind of in this box at the moment. So what I'm saying is I'd like this market to continue being bearish. All right, as it's been making lower lows and lower highs, pushing into these areas and hopefully straight through this green line, okay? But before it does that, I would like to see it take the liquidity of the previous session, which is above these Asian highs. Is everybody following me?
Yes, Jay. But the only thing is it's looking blurry back in there, back and forth, bro.
Is it?
Yeah.
Is it looking a bit blurry for you guys, yeah? Oh, 1 second.
It chipped in and out.
Let me do something because I've got a lot of. I've noticed that TradingView takes up a lot of bandwidth, I think. All right, so let me just close these down. I was looking at a lot of bits and pieces this morning, going nuts. Let me try and throw everything overboard, and I can throw no more overboard. That's it. In fact, I could probably close down Focal Shop. See what's ringing? Our GU's, look at our GU absolutely motoring. Absolutely motoring, all right? Pushing up into these levels. Our entry was down here. Like I said to you, I want it to cut. Tell me if it's still blurry, sorry. If it's still blurry, let me know and I'll try and do something, all right? I don't know why it's blurry. I'm thinking it's my connection. I was having some connection issues yesterday. Are we okay? Is it a little bit better in regards to the resolution and stuff?
Yeah, better.
Yeah.
Okay, fantastic. So, what I was saying is that I hope you are all following me, that when London started this morning, I was hoping to see London up here, grabbing this liquidity straight away. Nam. And I'll be interested in getting in for the sell, because I want to be in for the sell. I'm not anticipating, I don't want to see this market really breaking above these levels here, because this is the low, lower low, lower high. I'm trying to think to myself, we're going to get into a lower low. Yeah, but the market, when I looked at it at London Open, this yellow little box here, the market was coming down towards these levels. Look at the time, 7 o'clock, 7:15, 8, 7:30, it was coming down here. And I was like, okay, maybe the market wants to grab the liquidity first from below this level, which in this instance, it not only took from below that level, it went and wicked down into a previous, the PM New York session over here, and wicked and grabbed some liquidity from there ever so slightly. And then I saw this breaker structure, which was okay. It wasn't breathtaking. Yeah, it was okay. Now, I would like to see this market go and take this liquidity up here. I want to see it take Asian session high and then go. Does it have to? No. And at the moment, is it making a breaker structure manipulation? It is. Okay, and we're going to look at it, on a smaller time frame. Okay. So, the market has come up here. And this area was the area that pushed past and grabbed the liquidity from Asian session low. This is where it originated, the push from up in here. Okay, so when or if that market pushes above here properly, which it hasn't done yet, to be fair, it hasn't done yet properly on a 5-minute time frame, because the highs are about over here. I've got to look at it properly. Let me zoom in. Well, it has, it has wicked above these highs over here. And on a smaller time frame, on a 1-minute time frame, we have got this break of structure M-ish, okay? Now, what I'm going to say is if this market taps in here, we may see it running off down towards, towards us over here, all right? So I'm just going to simply going to place an alert below this level in here, because that's not what I want it to do. I'm not going to lie to you. I want it to keep pushing up to that red line you can see. But what I want and what it does, yeah, I see, we just see that little wick in here. That wick in here could have been our tap in, to be fair. The candle came down here, made the manipulation M, then we wicked in here. It could be our tap in. We might see this market now running back towards this side to capture some liquidity once again. All right, we may do. I'm risk free in at the moment, but it's just not the narrative that I really want to see happen. But we have, if I go to my 5-minute time frame, if we got into this trade over here, the issue is because I want to be in for the sell. So I'm kind of in the wrong direction anyway. I'm in the wrong way. So this is why these trades are more complicated, because I understand that I want to be in it for the sell, and I've got involved in it because I was essentially doing a bit more of an advanced trade and trading into the sell, trading into this area, all right? But the point is, at the moment, the market may just be respecting these little highs over here, which...
Could it be the fundamentals in the news that's coming out
could
today?
Be. Yeah, 100% could be.
Because I think Alan was saying the dollar might be quite weak today.
100% could be, and if the dollar is weak, that's in our favor for it to push up bullishly. It is, all right? So, we've got Fed interest rate decisions happening later on 7 o'clock, which is going to be big news. But, up until that time today, we might see the markets kind of mucking about, kind of like, just dilly-dallying, dragging their heel, dragging their feet, yeah, we may not. Well, and I'm thinking to myself that maybe this little retracement back here can turn around here. Now, why have I said that? Why have I given it a little level in here? A few reasons. First and foremost, we all understand how we can pull out our Fibonacci from a low to a high and identify a place where markets may have a reaction. Look, well, Kawinky Dink, that's right where I put my white line. Why else did I put my? Because it was a previous battlefield. Am I making sense? Does somebody understand what I just said, or do you want me to explain it one more time? I'm not saying that that's going to happen for facts. I'm saying I'm in it for the buy, and I think it wants to go for this red element here. But we saw a little small breaker structure M where we've had a reaction to it. If you got in that breaker structure M for the sell, for argument's sake, you'd be in profits right now, you'd be in the blue. But does that mean it's going to go all the way down here to hell? Not necessarily, because I didn't see it. This isn't that grabbed tremendous amount of liquidity to make a big journey. All right, so I'm in here, I'm still safe. The fact that my profits are going backwards is what it is. But the
blurry,
reality,
bro.
I'm blurry again, yeah?
Yeah, let's come back.
All right, so I'm trying to look at my resources. I think it's just my my connection at the moment. You know what happens is in the holidays, all the kids are at home banging Fortnite to death, yeah. And what you normally find, yeah, is that your connection with whoever your provider is, unless you've got something dedicated, you can see less than optimal performance from your internet. So I'm gonna blame my internet and all the kids up and down my street that are smashing FIFA and Fortnite and all those other games that they play on their PlayStation to pieces. And it can, and the joke is that these people, they have that in their terms. Their terms are, if higher than usual usage is happening in your area, you may see this, that, and other, which is just nonsense if you really think about it. But I do apologize, and if it does go blurry, please do just let me know. All right, I haven't got my camera on, so that's not that shouldn't be pulling on the bandwidth as well. So hopefully we'll get there. I identified this little area as a previous battlefield. Okay, obviously we can see the imbalance going all the way down to here in regards to this green candle. But I believe that this market really for coming all the way up here, should just go and take the liquidity up here first before making a big journey. All right. Now, I'm saying should, but I don't know. It was in very good profits here. It got to a 1 to 4. It's a completely risk-free trade. And if it decides to now come all the way down here and stop me out, is what it is. Yeah. got to a 1 to 4, and you know, at that point in time, you should have rolled off 50% of your profits in here. I find myself when I'm teaching, I'm a little bit more laissez-faire in regards to just letting things run. Once I don't lose money, I'm fine. Okay. But if you was in this trade, you would have taken off 1.5% or rolled off 50% of your profits anyway when it got to a 1 to 3. All right. I actually believe that maybe, I'm hoping right now we've come back into this previous, and this is what, and if you're hearing other educators' terminology, they will say previous resistance becomes new support. So there was resistance here at this level in here, and now it becomes new support. That's what they'll say in regards to how I'm trying to say that maybe this market might turn around there. It's the same principle. I'm saying to you, this was a previous battlefield. Market's come down and closed this big green candle imbalance. And hopefully now we're going to turn around and go for where I think the market wants to go for. All right. But ultimately, I'm letting you guys know, once we get up into those levels, I'm not just going to be hitting my button because I'm a button hitter. No, but I'm going to be thinking to myself, if I see that market, especially if this is a New York session, you know, etc., within my kill zones, I'm going to be thinking to myself, yeah, boom, maybe this market wants to rock and roll, because I wanted it to take this liquidity above this Asian high, this red block over here. Look at the time. This is when you're sleeping. This is when Asia's open, from about midnight coming all the way through to 5, 6 in the morning. At 6 o'clock in the morning, you have Frankfurt that opens up first in Europe, and then you have London at 7 o'clock. All right, then London runs through, and we have New York happening at 2:30. So this is what's happening in these sessions. But there is a lot of news today, and there is one big news here in the USA, which is Fed's interest rate decision, which means sometimes the markets sit around and go, oh yeah, we think it's going to be 5.5%, yeah, consensus. We're going to wait and see. Yeah, they just sit around and say, we are just going to wait and see whether that's the case. All right. So yeah, all right. So that's my thought process with GU. I hope it makes sense. I hope you understand why I've said the things that I've said. And just because I've said the things that I've said, does not make them true. I wish it did. I wish just because me saying it makes it true. But that's my story. We are trading down in my opinion, towards real discounted areas, real discounted levels. But even if you look at the 1 hour here or the 4 hour, there's nothing in here from a bigger picture perspective to say that what I should be doing is I want to be buying it. I am buying into a sell, yeah, which complicates things, but I'm buying into selling this market. Okay, really, I want to be in for the sell. And if I take an L, which I'm not going to take an L now because I've rolled off 50% of the position and it's completely risk-free, but then I'll just be like, cool, because I actually want to be in for the sell. So cool, you're just confirming to me that this market wants to do something. But look, this market pushed down here, boom. Made a big indication, breaking previous structure over here, indication. Then it did what? Corrected. As we understand, markets like to correct, and it closed that whole imbalance. Where did it come to? Have a look at this, even on a bigger picture, look. Yeah? It came to where the break was, where it broke. In here would have been our lovely little zone on a bigger picture. And the market tapped in there and started to move. The only issue is that the market has not yet continued in regards to breaking this low. So that's why I want to be in for the sell. And then for sure, when I'm in that sell, this will be a target for me. I'll be like, yeah, I'm trying to get down to at least down here and breaking past that structure. Yeah, but it's just whether or not the market is ready to continue doing that bearish action or not. I can see here on a 1 minute time frame, if I zoom right in on my broker anyway, that manipulation M over here still has some unmitigated imbalance in here, but we definitely see the market came here, tapped in. Look, if I rewind this here, so you can see the tap in, and now it looks like it's going to, it's very close to stopping me out. All right. Very close to stopping me out from where my entry is. Okay. We can see here, if we rewound it, that's my alert ringing saying it's very close to stopping me out. I have no issues. I'm completely risk-free. Look, who was looking at this market here? The market just came and captured some liquidity from above these levels here, above here, and just about above here also. Okay. Captured the liquidity and made this breaker structure M. Then we're waiting for the next candle. We have 3 candles here, 1, 2, 3. We're waiting for this candle we're waiting for it to tap into an imbalance here, all right? And we've seen this candle come here. This tapping isn't great. I'm not gonna lie to you. This price action isn't great. And really the imbalance, in my opinion, is unmitigated and still sitting here. In my opinion, there is unmitigated imbalance sitting in there. I just wanted it to go and grab the Asian session. Now, what I want don't mean jack squat. I'm not gonna lie to you. What I want don't mean anything. All right. I wanted it to come and go for this level. By the moment we made a really deep retracement back into another unmitigated area in here of imbalance, where we had a bit of a breaker structure at W, but from a location perspective, it wasn't just after liquidity had been swept. Do you understand? We've seen our rule. Our rule is we only want to get into trades after liquidity has been swept. I'm feeling now that the way this market's moved and kept on rolling, that this was the tap-in, as small as it was here. This was the tap-in after grabbing some liquidity with this little wick here above all of these levels. All right. I'm going to watch it now. I'm going to see whether or not we're going to break outside of here. Now, if we do break outside of here, this is where we can flip. I'm going to give you guys the energy. This is where you can flip to your other understanding indication below this level. You want to wait for a correction, continuation. Do you understand? Do you see the different plays that you have to your arsenal of understanding the markets? Because at the moment, look, this market is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then the market came over here, made equal highs, higher lows, higher highs. It's ultimately consolidating. It's consolidating. You know, within this yellow box, which is London session, this market is ultimately consolidating. But if it does this, well, that is indication, correction, continuation. You have the ability to get into this trade, especially if it's within our trading area, trading time. All right, because the market has grabbed liquidity, and what you normally find is it will grab liquidity on a smaller time frame. It might even do this. Watch. On a smaller time frame, the market might even do this, and then do this, then do this, and then it's going. Yeah, then it's going. This is a different play, but it's the same that you understand of indication, correction, continuation. Yeah, my concern was just as the session opened, I just wanted to see it take Asian, well it did over here, take Asian session low, liquidity. Here, look, nam, 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 nam. I wanted it to push all the way up and take Asian session high. Didn't. It just came back up, wicked above these little highs over here. And it seems like that was enough for it to try and make its play back down to London lows. Because this is London session, this yellow box. Okay? Like, it's fine. Nothing we've said here has lost us any money or has been inaccurate. It's just that I would have loved to have seen this really push up here and take this red line. I've got an alert sitting on that red line and everything, and it just didn't. We go over here, and remember, as soon as I saw this little M forming here, you heard me go, boy, I was talking about whatever play we was looking at. I said, there is a bit of a breaker structure M forming here, which for me shows that the market's watch, look at the indication. Indication. Yeah, breaking previous structure. All right. The correction, in my opinion, was very fast in this wick, and then closing back down below over here, wherever it may be. And that's the only reason I was a little bit like, this is a very quick tap in. This little wick here was very quick tap in, and unfortunately, I didn't catch it. And I was in the market here in profits, 50% rolled off and completely risk free. And the market came down, and as soon as I started seeing this price action, if I was probably maybe just trading by myself, I would have flipped and said, okay, cool, I'm in for the sell. All right, because the market has broken structure, indicated, kind of corrected. The correction isn't tremendous. Hence the reason why I still said that this is some unmitigated area over here. but it is what it is right now. All right, coulda, woulda, shoulda, maybe, might have. Yeah. So we're watching this market now. Zoom out this 1 minute time frame, and let's see what's going on. Have a look. Can you see that green line? That green line is showing that premium, how the market came in, tapped in, came in. I tell you what, let me say something. Maybe I should have been more diligent to this bit of liquidity here being taken by this wick and that M4 min. Why? Because it is sitting in line with the trend that I had drawn in here. Though I wanted it to come up here and we can take this first, this was more in line with the trend. Look how many times this trend was respected. You know, boom, boom, and it's come back in here, boom. Maybe I should have been more, you know, wise and sharper to here, that area, especially as at that point there, we can see how the market made a lovely manipulation breaker structure M. Whether or not I still would have caught that little wick in, it's arguable. Whether I would have caught that little wick in and said, yeah, I'm in for the in the trade. But we can see here, we can see how we've got a story. We're looking at the markets. We're asking ourselves questions. You see, even when it got into this little previous battlefield, look, we had a reaction, came up in here, but it wasn't enough. Sellers kept pushing it down. Said, you know what, we don't care about that battlefield. And we've seen right now that the market's pushed all the way down below these previous lows. All right. So understand what's going on there. But this is still in this consolidation phase because we was here going, look, lower lows, lower lows, lower highs, lower lows, lower highs, lower lows. And then we went kind of up here, then higher lows, then higher highs. It's confused. What is it doing? We don't know. But now we've just made a lower low. The question is this market going to come all the way up in here, make a lower high? Yeah. Or all the way all back up in here because it's still consolidating. We don't know. Yeah, I'll be honest with you. We do not know. And for me, this isn't great setup. It's not setting up nicely. It's mucking about at the moment. I'll leave GU for now. I'll pop a little alert in here if the market starts pushing down in here. But remember, as a big part of taking trades and trading is knowing what trades not to take and not trading. Okay, let's have a quick look at NAS that rang and I wasn't able to look at it because
you see to cut there, Jay. I don't want you to move too fast and come off of that. Do you hear me?
Go on.
I was gonna say, so you see what I've got from what you just said a while ago is you're marking out the Asian high, Asian low, and then what you're saying is something to look out for is the session afterwards will like to take liquidity from either side, either the credit side.
Yeah, I mean, that's exactly what I'm saying. But what I'm also saying is that liquidity sits above all mountain tops and valleys. That's the reality. Okay. But the Asian session high and Asian session low or previous session high and low does serve as a great little area whereby you got to think about the other sessions as like they're the up. Yeah. And they want to go and take the orders from that session. So imagine that you as you've gone created. You've been working all day long. Your A team, and the A team have put this many beans in the jar. When the next session comes and the B team comes in, they want to go and lash your beans. Do you understand what I'm saying? They want to go and take your liquidity. So for example, here this trade here that allowed me to get into this trade from down here to up here is because here was the Asian session low. The market came down here in London, but I just didn't like the fact that it didn't do it straight away when the volume came in, or that we was over here, we didn't push up. We started coming down here. We took the Asian session low. At that point in time, I said, okay, we've taken a low. I was looking for a buy. I got in here for a buy when I saw a break of structure W the way I wanted to see it on a different time frame. It looked more like a manipulation W. And I was you heard me, a bit dubious in here. My entry was literally here. All right, the market pushed all the way up here, gave me a lovely 1 to 4. But when it got to this area, for whatever reason, above this high, wicked above here, took the liquidity. Look, as it was going up, it's taken liquidity from all of these levels.
Yeah, I can see it.
Do you understand? All of these this liquidity is being taken. Yeah. And you also hear people say even trend line liquidity is another terminology. Yeah. Look, if I was to draw a line like this, this creates a trend line where everyone's going, look, it's going down, it's going down, it's going down. They're placing their stops above here, their stops. So there is liquidity sitting above this trend line. This is trend line liquidity. This push up, takes trend line liquidity and wicks above this level. Now, why this level and not it keep going all the way up in here? This is what the conversation I was having with myself. So that conversation I was having with myself was, if I really look at it, this kind of angle of this green line, which is just a line, it's not drawn specifically, but this angle of this green line based upon previous data points meant that around this area, that I should have been a bit more sensitive to seeing this break of structure M, which, to be fair, I did. I saw it as it was formed. Yeah? And it went. Go on.
Nah, I was going to say, I don't know how many sessions I've missed here, but I don't know what do you call it? What M? A confirmation M and a W. I didn't catch that.
Okay, you missed some sessions, bro. That's what happens when you miss when you miss class, my bro. You get what I'm saying? And next thing you know, the other students will start excelling past you and start hearing things you didn't hear. All right. So what it is this?
I'm listening.
We understand that the markets. Let's go and give you a nice plain space. We understand that the markets move like this. Okay.
In waves.
All right. So sometimes when we see markets do this, and break structure, first of all, we have some rules that's going to help us to be more profitable. We're gonna assume that over here, is Asian session over here. So this the liquidity, we don't want to take any trades until first liquidity. So let's imagine there's liquidity here is taken. We want liquidity to be taken first for it to get that fuel, and then for it to run in a direction.
From a new session.
From any high first, from any significant high. The reason why I drew this like this is because this would be a significant high over here, because we've got strength and speed that previously pushed the market down. All right, from this level here.
And what you've drawn on the right is the new session, yeah?
And what I've drawn on the right is just the market pushing up here. And the reason why we have our sessions is because what we're trying to say is that there are high probability times that you should trade. The higher probability times that you should trade are within London or New York session.
Yeah.
All right. Outside of those times, you may be dealing with the markets just doing the hokey cokey.
Yeah.
Do you understand what I'm saying? Yeah, the markets just going. Go on.
No, I said understood.
Yeah. So for that reason, all right, we just saw another breaker structure W bit happen and it tapping back in. Maybe it wants to push back up now. It's just mucking about right before the news. All right. We can see the market's kind of trading within the range. But yeah, so within these sessions, ultimately what we want to see first is not just a normal M like this. Okay. Ultimately, what we like to see is that there's a difference between a normal breaker structure like this. Because for us, this is just an indication, right? It's just an indication below this level. Am I correct?
Yeah.
This is just an indication. And afterwards, we normally wait for a correction and then a continuation. That's our understanding of our market structure price action movements. But I'm saying to you, what we prefer is that we saw this structure happen like this. This now becomes a manipulation M, where the right shoulder is higher than the left shoulder. Previously, in the other life, this was just a McDonald's M like this, where those levels are the same. Even though this might have broken structure, those levels are the same. But we want to see a manipulation M. And then we want to see that the price move with strength and speed like that, on that leg out. And normally what happens is that will create an imbalance. And that imbalance gives us an entry potentially here. Okay, now the reason why we're having this new play, because this is something that we can get in and we can do very, very quickly. We can get in this even on a minute time frame. Remember before I was just shy away from you lot being in the minute time frame, but this structure and these steps is going to allow you on a minute time frame to be able to find an entry, because when you see this happen, this manipulation M, it will allow you to place a limit order like this, yeah, or to manually execute when you see the candle come in here, close the imbalance, and then react out of it. It will allow you to manually take that trade and allow you to get potentially 1 to 10 trades. Yeah, 1 to 3 is where we make our trades risk free. okay? And we take off 50% of the profits by taking partials. But this trade for the whole session should be going and targeting the opposing liquidity zone. So what we're basically saying is that the markets move, not forget about fundamentals and the bigger picture. On a smaller picture, it's liquidity that drives the markets. Pure liquidity drives the markets. It going and grabbing this liquidity, nam, 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 running in the opposite direction, grabbing liquidity, nam, 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 rubbing in the opposite. That's what drives the markets on a smaller time frame. So even if the market's bearish, you could take a bullish trade because you saw the market capture liquidity and do the things that you look out for, i.e. make a manipulation W, i.e. tap back into the imbalance, i.e. you see candlestick formation showing you that it wants to, push up bullishly. And you could be able to get that trade within our session and be finished trading within a couple hours of London session or a couple hours of New York session. Let me show you a true life example. So true life example is this. Can you see the trade that just stopped me out? That whilst I was on a call to you, I said to you, whilst I was talking, I said, look, we just made a manipulation W down here after grabbing liquidity that was below this level here. There was liquidity below that low. All right. Why? Because the market was coming down here like a ton of lightning, and it stopped here to the point where it decided to change direction. So though it's not breathtaking, oh my gosh, it's such an obvious liquidity zone, but below these lows of any point here, look, if I go to my 5-minute time frame, below this low here, which is also the previous New York session. In fact, I think that was my area I just missed. I just missed the real area. Remember before I was a bit iffy of how to get in. Just below this level here, which is previous session. This is a previous New York PM session. So this blue line, we've just seen the market go and tap underneath that blue line. Let me show you something. Oops. What do we look for? Somebody's going to turn around and say to me, what can they see in here? All right. Maybe it's not the clearest in there, to be fair. It's not the clearest because on my Owanda, this candle doesn't exist. All right. But either way, in here, I can see this. Price coming into here. Oh, I'm going to make it white. Oops. I can see price coming into here, taking liquidity, doing this, and then erupting out of here. All right. Now, when it pushed out of here, ultimately, it created an imbalance in here. All right. That the market came and very quickly tapped into. This wick tapped into this area as this displacement, this strong push. The market came back down relatively to that battlefield of where structure was broken. Yeah, in here. And then zoop, we've gone. Yeah. Now, someone, just like I was saying before, could say that in here there's a little bit of unmitigated imbalance in that little area, and they'll be correct. But the way this market is pushed up like that, boom, 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 all the way up over here, even wicked above this little area here, we can see, in my opinion, even though it's tapping into these, making these breaker structure W's and that, we can see that the market's kind of ramping a bit. Do you understand what I'm saying? Look, it's kind of consolidating and ramping, taking liquidity, making the breaker structure, having a very quick wick in and running back up here, broker structure over here, have a very quick wick in running down. It's kind of ramping. Yeah. And why is it ramping? More than likely because of what's going on today. Because of news. All right. Which is this news. Don't get twisted. Even though it's all the way at 7:30, this is Fed interest rates decisions. Yeah. This is a big one. Yeah. That could move the market, but it's all the way at 7 o'clock. Now, what does that mean? That means that before that happens, the markets may be a little bit boisterous. Yeah. Which in my opinion, this GU is doing at the moment. Could I have caught this trade down here? Possibly. Possibly. Could I have caught this trade to where we are right now? Possibly. Is it telltale, perfect, setup, very obvious? No, not necessarily. All right, not necessarily. Okay, so the point is that for you there, Jeevan, we've got this little step guide, and the step-by-step guide is all about market structure and price action. It is, but it also adds some other rules. It lets us understand, high probability trading times within the sessions, which is London and New York. all right? New York actually has 2 sessions, all right? Has a kind of AM and PM session, all right? Then we want to see, I am modifying this as well. There's a couple of little things I'm going to tweak. Find the areas of liquidity. Basically what we've been doing here, drawing where are the liquidity? Look, you see where it just went over here? And I was saying, okay, it's just come and taken the liquidity. But when I looked back in history, looked historically back here, we can see that the market has not only taken that, but also took these lows over here. Yeah, these lows over here, which was previous New York low, is it taking those lows? Do you understand what I'm saying? Like, that's the point. So say, for example, right now, if I delete everything off my charts and I'm just looking at it like this, and yes, I've got this indicator on, but let me show you something. You don't need the indicator. If I remove this indicator, get out of the 1 minute time frame because it's too noisy. Let's go to the 15-minute time frame. Well, you know, we can see here areas of liquidity that are significant. Okay, we can see these areas. Now if we drop down to a smaller, because we're looking for smaller moves, yeah, we can see here, for argument's sake, that, you know, it's pretty obvious that the market over here, boom, and how you define a better liquidity area of liquidity than another is from wherever it's originated. You want to see the push down break structure. So say, for example, let me show you the difference. Let me show you the difference in a zone. Like this little area here, the market's coming up here, then boom, it hit something and pushed down. But that push down didn't break the previous structure. It just pushed down to here, went meh, and then kept going this way. So this can't be a strong area of you know, where there's a lot of liquidity sitting. Yeah, who cares about it? Nobody cared about it. It went down here and then it actually came down here, regrouped and just smashed through that area. But if there was an area, for example, look at over here, and this is also has to align with the direction of the market. Do you understand what I'm saying? It has to align with the direction of the market. Okay, like we can understand that if maybe this market came and took this little level over here on a smaller time frame, because I'm only on 5 minutes, that this is an area that there'll be probably a lot of liquidity, because, you know, people have said, rah, look at it from here, boom, that market pushed all the way down here, red, and broke some previous structure. So this area is of more value than this little one over here. All right, now if you do it on a larger time frame, have a look. We've identified these areas on a 15-minute time frame. If you want to go on an hour, they are pretty much similar, the same levels. Now watch, if we put back our indicator, like so. So now we can see our indicators on. We see our indication is on, our levels are on there. All right, okay, and so if we go and look at it like here, we can see. Let me get rid of this so it's not in the way. We can see that this first level here is an Asian high. Well, I thought it was going to sweep. We can see that other level that I put in the 15-minute time frame is the London high over here, because it's this yellow box here. All right, this wick over here, let's have a look. Something is a New York low over here. Is a New York low over here. And this here area where I put this little line over here, we can see is a previous London low. So even without all these Technicolor Dreamcoat indicator on, we can identify these areas of liquidity. Yeah. Now, if you're somebody who you want to try and practice this and look and see, you know, how correct this is and what the power of it is that you can back test, you know, and you know, you can go through the steps of understanding which way is the market going. Okay, the market isn't bearish. Now, it's not, the market doesn't only just go and grab liquidity before it moves. It also taps into previous battlefields, as we know, and it indicates corrects and continues. Okay, but I'm just saying this play that we're talking about is when the markets first start, when London first kicks off or New York kicks off, and we can see an area of liquidity, even if it's against the overall trend, we understand that the market look, have a look here. We understand that here was, look, liquidity, Asian session. I'm just gone back. Asian session was here. The market came up in here, grabbed some liquidity in here. But what we're looking for, what we look for, all right, we're looking for our break of structure, double. In fact, let me go back. Where was we? Put a little vertical line in here so I don't lose us. See if I get egg on my face or if I can show you a good example. I'm looking for that yellow line going up. I'm looking for that yellow line going up. All right, so have a look. This isn't today, is it? Am I going mad? No, this was yesterday. All right, so look, even in here, we can see here the market. If I do this, in fact, in this instance here, the market's here grabbed liquidity from over here. Okay, now this one did play a little bit of silly buggers, a little bit, because on the 1 minute time frame, there was a break of structure M here. And the market came and tapped in nicely and started running in a direction like it was ready to go. It did. I can't lie to you. It started running in this direction like it was ready to go. But then it came back up in here and did it again. So you may have been stopped out for this trade because it came up here and did it again, broke structure, made a big manipulation M. And another thing you have to do with your M's, yeah, or your structure, is you've got to look at it objectively. It's not going to always be this perfect, beautiful, straight out of the textbook M. Like, for example, in this M, there's a little bit of a kink. We can see it here. There's a little, maybe on this time frame, maybe it's not a real good time frame to look at. But we can see how this market pushed down here. What you're really looking for is you're looking for that displacement after liquidity has been taken. So here you got into a trade, you're in profit, cool. Yeah, you might have not made it risk-free at this point in time. And it's come back and stopped you out. But then you've seen liquidity taken again, and you've seen this energy of the market making one shoulder, making another shoulder, and then you've seen this displacement again. You're looking for this displacement. I don't know whether there was some news happening here, something else happened in here, or to make it have another little bit of a kink. But you're looking for this displacement. And it doesn't matter what time frame. On this time frame here, we see on 5 minutes, we've seen this displacement that broke the previous structure. At that point in time, I'm very interested in that battlefield area here. Even if I rewound it, I'm looking at that whole imbalance like, okay, lovely displacement area here in regards to that imbalance, but I'm particularly interested in where it broke through that battlefield. You see? And what did the markets do? Come back, tap into that battlefield, close the imbalance 50% of the way. Remember when we turn around before, we say sometimes we see the market go 50%? That's because that 50% area is around that previous battlefield. Yeah, and then we've seen the market go. Okay, so ultimately what we're saying is we don't want to take trades until liquidity is first swept. All right, we want liquidity to be taken first before getting involved. We want to wait for what we wait for, which is being able to see some break of structure, but then see that displacement. And ultimately, we want to see a lovely manipulation M, and ultimately, we'd love to see it straight out of the textbooks, like a beautiful, clean one that nobody can't deny. But I'm just saying to you, sometimes that's not the case. Why is it's not the case? Because it could be the brokers. It could be the brokers giving us the candles horribly. It could be just the way we've seen it. It could be some news happened that made. So the point is that we just have to be able to understand the areas of interest. For example, I'm looking at this NAS. I've identified this area of NAS. Why? Because we're in a premium. Yeah, but the only concern I have is that we're in a premium of this red impulse, but we're actually in a discount of the bigger overall orange impulse. This is my concern with NAS. That maybe NAS now wants to start getting back up into these levels. Look at it. Maybe NAS wants to start coming up in here. Now, at the moment, I've got no confirmation that NAS wants to do that on a smaller time frame. All right, because it hasn't broken up, those larger swing levels. Okay, which are going to be all the way over here. All right, it hasn't broken this level yet. but it's tapping into an area where I can see previously there was some beautiful breaker structure manipulation M's over here of unmitigated areas where there's some imbalance that I've identified. This one little area of imbalance on a larger time frame, which we are sitting in there right now, and also on a smaller time frame. If the market decides to push past that, there's another, I don't know what time frame I was on, area over here where we can see a beautiful breaker structure manipulation M with unmitigated imbalance in here. So this is an area of interest, but I'm a bit concerned about now just because where we are in the bigger picture. So what would I be doing? I'd be sitting here, dropping my time frame down and seeing how the markets react from those zones. Are they indicating correcting, continuing from those zones? Are they got, bearish candlestick formations from those zones? Do I see something happening from those zones? Then there's nothing wrong with me being able to determine and say, you know what? I like the way the candles reacted from there and deciding to get in for a trade. All right, guys, amazing day. I could be here all day going over this stuff with you. All right, but at some point we must say goodbye. And I'm going to leave you guys to have an amazing Wednesday and to go and fulfill your potential. I'm going to play something on our session, which is going to allow us to learn something new. Okay, to learn something new. All right, and that's what it's about. It's about learning. If you're not learning, you're dying. Okay, it's that simple. All right, if you're not learning something new, you are quite literally dying, because everybody else in the world and everything else is moving forward and learning and growing, and you are not. All right. So if it means that when you're in your car, you're listening to a podcast, or you read a book before you go to bed. All right. Make sure in that day. Obviously, Breakfast Club is a great addition to allow you to do that, because Breakfast Club you're learning. All right. But to be able to learn something new, even like yesterday I was listening to the whole situation about, do you know there was a huge massive rally, English rally in like Trafalgar Square and that not too long ago with what's his name, Tommy Robinson and all them kind of people. Yeah, there was a big. I've
been hearing about that still.
Yeah, they said about 30,000 people were down there. And it's quite interesting to be able to know that this is going on and see the tone of the country. The tone of the country is that, British people are not happy with, they're saying the illegal migrants coming into the country. Yeah. And that blurs all color lines as well. It's just, they're just not happy with it. Because, it's not the same. Now, look, to be perfectly honest, I love to hear all viewpoints, because I think they have a very, very strong point. Because me, as a British black man, have seen the landscape change in regards to how Britain looks. Okay. And you got to ask yourself, if you felt very entitled to Britain because you're an English white man, and you've seen your local area be completely transformed culturally to something that you don't recognize, you could have a problem with that. Now, my problem is that English people have a very convenient memory that whenever they feel like it, they want migrants and they want foreigners and they want people to do certain things. And then when it's not good for them, they have an issue with it. All right. However, the guy who was just a little YouTuber was going around interviewing people. The general consensus is that they have more of an issue with the illegal migrants, the people that are coming into the country that may be murderers, maybe rapists, maybe criminals, and there is no measures to vet them. And to be perfectly honest, for that reason, I agree with them. Because there are other countries, you can't go to Australia or certain places in America if you've got certain strikes against you, criminal record. They'll say, "Thus, we don't need you." Yeah, we have our own problems. We don't need more criminals coming in. Yeah, whereas UK, just doors are just open, and people are coming over in boats and coming over in the back of lorries and just disseminating into the community with their own culture and their own ways of doing things, which may not be conducive to your ways of doing things. Do you understand what I'm saying? And yeah, it was just interesting. The point I'm making to you is this, guys, is that I live in the world. You understand? And it's not the case that every single thing out here I need to know about, but I want to know what's going on. I want to be educated. Oh, AI is the new thing. Okay, what is AI? If you bump into one of your brethren and you say to him, yeah, have you heard about cryptos? And then he goes, no, blah, man, I don't know. But I mean, why? The same time you took to listen to that album is the same time you could have taken to listen to at least understand what crypto, what blockchain is, what's happening in AI. Because that's actually what's happening in the world. Your mixtape is not helping you in any way, shape or form. So I think it's very, very important that, you know, especially when you're in your car or you're in certain areas, because a lot of people spend a lot of time in their car. You could read a whole book, listening to it, audio book from your car. Do you understand what I'm saying? Like you could someone say, have you read X, Y, Z? You could say, yes, I have. You know, I've listened to it. Yeah. And I just think it's powerful. So like I said to you, I always try and put something on. I don't know what I'm going to play. I just look to see what they recommend, but something that looks interesting. And I can play audiobooks for people that want to read. You know, I have no issues with, one second, let me finish the session as well for those